When you buy a Bitcoin, you're buying 1/21 millionth of all the money on the network, or all the money in the world that's ever going to be on that network. Okay, so would you want to own 1/21 millionth of all the money in the world in 10 years, 20 years, 100 years, 1,000 years, 10,000 years? The product's not obsolescing. It's 1/21 millionth of everything, you see. The iPhone will obsolesce. One day you'll be using Apple Vision, or maybe they'll put a telepathic implant in your brain and you won't need phones and you won't need goggles, and maybe you won't need televisions. Those things can obsolesce, but will you want 1/21 millionth of all the energy in the human race? Probably. Like, the whole point of pure energy, right? Einstein said energy can neither be destroyed nor created. You can just transform it, right? It's a pure idea. And it's an idea that doesn't have competition because of the Immaculate Conception. There's one Bitcoin. There's one network that was created by a nameless, anonymous figure, Satoshi. And Satoshi gifted 1 million coins to the universe. Never ran an ICO. Never kept anything from a pre-mine. And the network now is just owned by the people. So how do you actually compete with that? It's hard to see how you compete with a pure thing like that. So it's a digital monopoly with no labor risk, no war risk, no product risk, no execution risk. Now, there is execution risk that takes place. So you have to set up Bitcoin miners. And if you set up a Bitcoin miner in China and they shut down Bitcoin mining, the miners lose money. But you don't lose money as the holder, right? So it's like the perfect monetary franchise. All of the work to improve Bitcoin is done by the miners, by the Bitcoin device builders, by the Bitcoin banks, right? BlockFi and Celsius can fail, but if you're holding Bitcoin in cold storage, you don't fail, right? The hardware company can fail, but you don't fail. I think in the Bitcoin world, what we would say is that Bitcoin is the most difficult property that the human race possesses or has yet invented to confiscate. And that's by virtue of the fact that you could take possession of it via your private keys. So, if you got your 12 seed phrases in your head, then that would be the highest form of property right, because I literally have to crack your head open and read your mind to take it. It doesn't mean I couldn't extract it from you under duress, but it means that it's harder than every other thing you might own. If you, in fact, it's exponentially harder. If you consider every other thing you might own, a car, a house, a share of stock, gold, diamonds, property rights, intellectual property rights, movie rights, music rights, anything imaginable, they would all be easier by orders and orders of magnitude to seize. So digital property in the form of a set of private keys is by far the apex property of the human race. Bitcoin's the most efficient use of energy in the world by far, right? Most people don't necessarily perceive that or realize that, but if you were to take any metric, energy intensity, you put like $2 billion worth of electricity in the network every year, and it's worth $850 billion. There is no industry in the real world, right, that is that energy efficient. Not only that energy efficient, it's also the most sustainable industry. we do surveys. 58% of Bitcoin mining energy is sustainable. So there's a very good story. In fact, every other industry, planes, trains, automobiles, construction, food, medicine, everything else, is less clean, less efficient. Life is hopeless for a lot of people, and Bitcoin is hope, right? Because it gives everyone an engineered monetary asset that's a bearer instrument, and it gives them a bank on their mobile phone, and they don't have to trust their government or another counterparty with their life force. I think the Bitcoin is going to climb in a serpentine fashion. It's going to advance and come back, and it's going to keep climbing. I think that the volatility attracts all the capital into the marketplace, and so the volatility makes it the most interesting thing in the financial universe. It also generates massive yield and massive returns for traders, and that attracts capital. Like, we're talking about the difference between 5% return and 500% return. The fast money is attracted by the volatility. The volatility has been decreasing year by year by year. I think that it's stabilizing. I don't think we'll see as much volatility in the future as we have in the past. I think that if we look at Bitcoin and model it as digital gold, the market cap goes to between 10 and 20 trillion. But gold is defective property. Gold is dead money. You have $1 billion of gold that sits in a vault for a decade. It's very hard to mortgage the gold. It's also very hard to rent the gold. You can't loan the gold. No one's going to create a business with your gold. So gold doesn't generate much of a yield. So for that reason, most people wouldn't store $1 billion for a decade in gold. They would buy $1 billion of commercial real estate property. And the reason why is because I can rent it and generate a yield on it that's in excess of the maintenance cost. So if you consider digital property, that's $100 to $200 trillion addressable market. So I would think it goes from 10 trillion to 100 trillion as people start to think of it as digital property. The goal is to create $1 billion block of pure energy in cyberspace. One that I could then move with no friction at the speed of light. Right? It's the equivalent to putting 1 million pounds in orbit. How do I actually launch something into orbit, right? How do I launch something into cyberspace such that it moves friction free? And the solution is a, a decentralized proof of work network, right? Satoshi's solution was, I'm going to establish a protocol running on a distributed set of computers that will maintain a constant supply of never more than 21 million Bitcoin subdividable by 100 million Satoshis, each transferable via transferring private keys. Now, the innovation is to create that in a ethical, durable fashion, right? The ethical innovation is, I want it to be property and not a security. A bushel of corn, an acre of land, a stack of lumber, and a bar of gold, and a Bitcoin are all property. And that means they're all commonly occurring elements in the world. You could call them commodities, but commodity is a little bit misleading, and I'll tell you why in a second. But they're all distinguished by the fact that no one entity or person or government controls them. If you have a barrel of oil and you're in Ukraine versus Russia versus Saudi Arabia versus the US, you have a barrel of oil, right? And it doesn't matter what the premier in Japan or the mayor of Miami Beach thinks about your barrel. They cannot wave their hand and make it not a barrel of oil or a cord of wood, right? And so property is just a naturally occurring element in the universe. Yeah, I think it keeps going up forever. I mean, there's no reason we couldn't go to 10 million a coin, right? Because digital property isn't the highest form, right? Gold was that low frequency money. Property is a mid frequency money, but when I start to program it faster, it starts to look like digital energy, and then it doesn't just replace property. Then you're starting to replace bonds. It's 100 trillion in bonds. There's 50 to 100 trillion in other currency derivatives, and these are all conventional use cases, right? I think that there's 350 trillion to 500 trillion dollars worth of currency derivatives in the world, and when I say that, I mean things that are valued based upon fiat cash flows. Any commercial real estate, any bond, any sovereign debt, any currency itself, any derivatives to those things, they're all derivatives, and they're all defective. And they're all defective because of this persistent 7 to 14% lapse, which we call inflation or monetary expansion. I think the provenance is really important, and if I were to look at the highlighted points, I think having a founder that was anonymous or pseudonymous is important. I think the founder disappearing is also important. I think that the fact that the Satoshi coins never moved is also important. I think the lack of an initial coin offering is also important. I think the lack of a corporate sponsor is important. I think the fact that it traded for 15 months with no commercial value was also important. I think that the simplicity of the protocol and is very important. I think that the outcome of the block size wars is very important. And all of those things add up to common property. They're all indicators of a digital property as opposed to security. If there was a Satoshi sitting on top of $50 billion worth of Bitcoin, I don't think it would cripple Bitcoin as property, but I think it would undermine its digital property. And if I wanted to undermine a crypto asset network, I would do the opposite of all those things. I would launch one myself. I would sell 25% or 50% to the general public. I would keep some of the I would pre-mine some stuff or early mine it, and I would keep an influence on it. Those are all the opposite of what you would do in order to create common property. And so I see the entire story as Satoshi giving a gift of digital property to the human race and disappearing. I don't think Bitcoin's a currency because a currency I define in nation state sense. A currency is a digital asset that you can transfer as in a transaction without incurring a taxable obligation. So that means it has to be a stable dollar or a stable euro or a stable yen, a stable coin. So I think you've got cryptocurrencies, Tether, Circle, most famous. Then I think you've got crypto platforms. And Ethereum is the most famous of the crypto platforms, the platform upon which, with smart contract functionality, etc. And then I think you've got just crypto securities. It's just like my favorite whatever meme coin, and I love it because I love it, and it's attached to my game or my company or my persona or my whatever. I think if you pushed me and said, well, what's the second best? I would say, the world wants two things. It wants crypto property as a savings account, and it wants cryptocurrency as a checking account. That means that the most popular thing really is going to be a stablecoin dollar, right? And there's maybe a fight right now. It might be Tether, right? A stable dollar, because I feel like the market opportunity, it's not clear that there'll be one that will win. The class of stable dollars is probably a $1 to $10 trillion market easily. I think that in the crypto platform space, Ethereum will compete with Solana and Binance Smart Chain. Property is low frequency money. So if I give you $1 million and you want to hold it for a decade, you might go buy a house with it, right? And the house is low frequency money. You converted the $1 million of economic energy into a structure called a house. Maybe after a decade, you might convert it back into energy. You might sell the house for currency, and it'll be worth more or less. if I transfer $10 from me to you for a drink, and then you turn around and you buy another, right? We're vibrating on a frequency of every few hours, right? The energy is changing hands. But it's not likely that you sell and buy houses every few hours, right? The frequency of a transaction in real estate is every 10 years, every 5 years. It's a much lower frequency transaction. And so when you think about what's going on here, you have extremely low frequency things, which we'll call property. Then you have mid-frequency things, I'm going to call them money or currency. And then you have high frequency, and that's energy. And that's why I use the illustration of you got the building, you got the light, and you got the sound, and they're all just energy moving at different frequencies. Now, Bitcoin is magical, and it is truly the innovation. It's like a singularity because it represents the first time in the history of the human race that we managed to create a digital property, properly understood. It's easy to create something digital, right? Every coupon and every skin on Fortnite and Roblox and Apple TV credits and all these things, they're all digital something, but they're securities, right? Shares of stock are securities. Whenever anybody transfers, when you transfer money on PayPal or Apple Pay, you're transferring in essence a security or an IOU. And so transferring a bearer instrument with final settlement in the internet domain or in cyberspace, that's a critical thing. And anybody in the crypto world can do that. All the cryptos can do that. But what they can't do, what 99% of them fail to do, is be property. They're securities. And I happen to think that won't be done by the crypto industry at all. I think that'll be done by centralized applications. I think it'll be, the Citadels of the world, the high-speed traders of the world, the New Yorkers. I think it'll be Binance, FTX, and Coinbase as a layer 3 exchange that will give you the yield and will give you the loan and the best terms. Because ultimately, you have to jump these compliance hoops. Like BlockFi can give you yield, but they have to do it in a compliant way with the United States jurisdiction. So ultimately, those applications to use that digital property and either generate a loan, give you a loan on it, or give you yield on it, are going to come from companies. But the fundamental difference is, it could be companies anywhere in the world. So if a company in Singapore comes up with a better offering, right, then the capital is going to start to flow to Singapore. I can't send 10 city blocks of LA to Singapore to rent during a festival, but I can send 10 blocks of Bitcoin to Singapore. So you've got a truly global market that's functioning in this asset. And is there a second order asset? For example, maybe you're an American citizen and you own 10 Bitcoin and someone in Singapore will generate 27% yield in the Bitcoin, but legally you can't send the money to them or the Bitcoin to them. It doesn't matter, because the fact that that exists means that someone in Hong Kong will borrow the 10 Bitcoin from somebody in New York, and then they will put on the trade in Singapore, and that will create a demand for Bitcoin, which will drive up the price of Bitcoin, which will result in an effective tax-free yield for the person in the US that's not even in the jurisdiction. So there's nothing that's going on in Singapore to drive up the price of your land in LA. But there is something going on everywhere in the world to drive up the price of property in cyberspace if there's only one digital Manhattan. And so there's a dynamic there which is profound because it's global. But now let's go to the next extreme. I'm still giving you a fairly conventional idea, which is, let's just loan the money fast on a global network and let's just rent the hotel room fast in cyberspace. But now let's move to maybe a more innovative idea. The first generation of the internet brought a lot of productivity, but there's also just a lot of flaws in it. For example, Twitter is full of garbage. Instagram DMs are full of garbage. Your Twitter DMs are full of garbage. YouTube is full of scams. Every 15 minutes, there's a Michael Saylor Bitcoin giveaway spun up on YouTube. My Office 365 inbox is full of garbage. Millions of spam messages. I'm running 4 different email filters. My company spends $1 million a year to fight denial of service attacks and all sorts of other security things. There are denial of service attacks everywhere against everybody in cyberspace all the time. It's extreme. And we're all beset with hostility, right? You've been a victim of it in Twitter. You go on Twitter and people post stuff they would never say to your face. And then if you look, you find out that the account was created like 3 days ago and it's not even a real person. So, we're beset with phishing attacks and scams and spam bots and garbage. And why? And the answer is because the first generation of internet was digital information and there's no energy. There's no conservation of energy in cyberspace. The thing that makes the universe work is conservation of energy. Like, if I went to a hotel room, I'd have to post a credit card, and then if I smashed the place up, there'd be economic consequences, maybe there'd be criminal consequences, there might be reputational consequences. A lamp might fall on me. But in the worst case, I can only smash up 1 hotel room. Now imagine I could actually write a Python script to send myself to every hotel room in the world every minute, not post a credit card, and smash them all up anonymously. Right? The thing that makes the universe work is friction, speed of sound, speed of light, and the fact that it's ultimately it's conservative. You're either energy or you're matter, but once you've used the energy, it's gone, and you can't do infinite everything. That's missing in cyberspace right now. And if you look at all of the moral hazards and all of the product defects that we have in all of these products, most of them, 99% of them, could be cured if we introduced conservation of energy into cyberspace. And that's what you can do with high-speed digital property, high-speed Bitcoin. And by high-speed, I mean not 20 transactions a day, I mean 20,000 transactions a day. So how do you do that? Well, I let everybody on Twitter post 1,000 or 10,000 Satoshis via Lightning wallet, a Lightning badge. Give me an orange check. If you put up $20 once in your life, you could give 300 million people an orange check. There are 360,000 people on Twitter with a blue check. There are 300 million people on Twitter. The conventional way to verify accounts is elitist, archaic. So, to summarize, I am more bullish than ever.